Hey, good morning, troopers. Doing a quick sound check, screen check. Everything should be broadcasting okay. Hopefully, just a quick reminder. It is heavy on the internet bandwidth thingamajig. So if you're using other programs while viewing this webinar, which need internet access, it is worth closing them down, and that way you'll see an uninterrupted broadcast. Okie dokie. So let's get started. It's Monday, the 7th of October, 2013. Already. It's only, feels like yesterday. It was the 1st of January, 2013. We're well into the first week of the last trading quarter of the year. Looking at the calendar ahead, not a whole lot going on as the week kicks off, but it does get a little bit more exciting later on. On Wednesday, we have the release of the FOMC minutes. I think that the FOMC has become an anticipated event from market participants. Everybody wants to know to taper or not to taper. The federal government shutdown in the States means that we didn't have NFP last week, and there's not a lot of other US data coming out this week. Most of the data which is being released in the States is coming from private organizations rather than Fed bodies themselves. On Thursday, we have Australian employment figures, but I guess more critically, the one which is going to be watched is going to be the release of the latest monetary policy decision by the Bank of England. There's 3 data releases which are listed for that. You have the Monetary Policy Committee rate statement, you have the official bank rate, and details of the asset purchase facility, which is our quantitative easing program here in the UK. It's interesting to note that a couple of weeks ago, there was an article in the Yorkshire Post, no less. They did an interview with Mark Carney, who's the governor of the Bank of England. And in the interview, it was almost as though he was dropping hints that, he's not very keen on the asset purchase facility itself. Look, I think everyone remembers the kind of reaction when the Fed first announced in its spirit of openness that it was thinking about tapering and pulling back on the bond purchase program. But everyone kind of remembers the reaction that we had in the market at that time. All right, so here we've got not maybe in black and white, right, that look, we're going to do this, but certainly some hint dropping, all right, certainly some hint dropping. So it's worth keeping an eye on that now. It's definitely worth keeping an eye on, and I think if such a program were, if the QE program were to be pulled back here in the UK, then why not to expect a similar kind of reaction in the markets to the one that we saw in the States? All right, that's what I'm thinking. So just some kind of raw thoughts here on the events as they're developing. But that's it. I think that's the kind of key event for this week. On Friday, there's some Canadian employment numbers, but I don't even think the Canadians are interested in those. So they really cause that much excitement, right? So we've got the FOMC release on Wednesday. We've got the MPC policy decision on Thursday, and I think that will be the one. If anything's going to cause volatility, it'll have to be that one. All right, what are we looking at on the charts? A lot of technical levels this week in order to be eyeing and to be keeping an eye on. First off here on USD JPY, we have a trend wall on USD JPY. You can see that here on my H4 time frame. So, it's taken from those highs going back to May and, connecting the various supports. And what we saw over the course of the last month, over the course of September particularly, was that when the price came back and it retested that wall, what we saw was a very clear case of resistance turning into support. What that allowed us to do, and if you've been following for some time here on FX Street, we've been talking about this wall pretty much forever, but what it allowed us to do was to buy bounces off of that wall as the price struck. We've seen the price come back in and hitting the wall again over the course of the last couple of weeks, but it's last week in particular which I want to be thinking about, which is, the price hit the wall, it bounced off of it about 70 pips in the first instance, 50 pips in the second instance. And I've been thinking about this. What it looks as though is happening is that buy orders are getting soaked up at that wall, but it doesn't really look like there are enough orders there in order to allow this pair to develop a northerly momentum. All right. So the reason I'm raising it is because I've been playing long bounces off of the wall, and that has been my trade call on USD JPY now for a couple of months. What I'm saying now is just wait, hold off. All right. Don't be looking at buying this wall anymore. She's not giving the kind of momentum that you'd expect to develop off of it. So, it's very much a case of judging the price action as it develops. You have to be able to interpret it and to be able to make a decision and say, am I playing or am I not playing? All right. It's time to stop playing. We had a nice ride. We banged 200 pips off of it, then 150 pips off of it, then another 50 pips off of it, then another 50 pips off of it. I think that's enough. The price action now is saying, stop. The wall's not going to hold. In fact, it looks as though it's been breached. And if it's breached, then you're looking at further extensions to the downside. And, we have harder support coming in at the 94 handle. So I would either wait for it to go and hit the 94 area into the 94 handle, or I would wait for bullish momentum to develop or some kind of structural change before getting involved north on USD JPY again. What's the kind of change that I'm looking for? So I'm just on the hourly chart now, and on the hourly, there are a couple of important areas to be looking at, right? So first off, we can see that there's a support resistance which has been established around about the 97.50 area. So we have a nice resistance there. What I've been looking for is for the price back to break, let it rally, let it build support. And once it's built support, then as an extension, you can be looking for that momentum to continue to the upside. Until it does that, then I'm not interested. I'm not interested now in buying at the wall. I want to see a rally first. I get the rally, I play. I don't get the rally, I'm not playing. The other important level to have marked on your screen is 98.40. 98.40 just merely represents our monthly open price this month. Above that level, the monthly candle is bullish. Below that level, the monthly candle is bearish. All right, so it's an important level, particularly from the point of view of having a sensible way of establishing directional bias on this instrument. All right, so need to see her above the nearest resistance level, which has been established right here. If we see support building above that level, it's fair to be playing long at that point. We have good risk definition using that area in order to define it. But if we're going to get excited about her, we need the monthly direction to change bullish. That would mean at this moment in time, a move above 98.40. All right, so that's when we can really get excited about USD JPY. Until then, I choose to sit aside. If anything, she does look as though she's going to be heading lower. Even if she's bumping into a support area now, it doesn't really matter. The most recent momentum that we're seeing here is to the downside, right? So no reason not to believe that that is not going to follow through at this stage. She does seem to be ignoring the wall. The wall does not appear to be holding. That was going to be our technical entry on this instrument. Okay, what else am I looking at this week? We have a whole bunch of technical levels that we're looking at the moment, mostly affecting the commodity process. So let's have a quick gander through those. First off, the AUD/USD. All right. So what are we looking at here? Is a resistance which has been established. That's coming in around about the 9460 handle. I like this resistance because it's very clean. All right. It's hitting that level very, very clean. All right. So what I'm saying about the AUD/USD, this is a kind of near-term analysis. She's below resistance. What we're saying is that from a technical point of view, as long as she remains below this resistance, then you will be looking for an extension to the downside. If it happens that you get your Marubozu through that level and the price breaks up through it, then at that point, if you're bullish on this instrument still and want to see further extensions toward the upside, that Marubozu through the resistance would end up becoming your trigger looking for a move to the upside. All right. So default position on the Aussie dollar is south, a break through the resistance, and at that point you can start looking north on this particular instrument. We have a very similar technical playing out on the Kiwi. This is one which I mentioned in my trade notes last week. But again, if you're looking at it from a structural point of view, you see the price falling, pulling back, making resistance, falling again. That is the area, that is the block that you want to have marked on your charts. And again, it's resistance that is coming in around about the 8340 handle. All right. So from a technical point of view, as long as the price remains below 8340, default position on Kiwi is south. And I think, if this is holding, you're going to be looking for quite a decent extension to the downside. She ends up sub 80, and you're looking at a retest of the August lows. You're looking at a move back towards the 78, 77 handle, right? So quite a critical level right now. But again, it's a technical play, all right? So the most recent momentum, pretty much the whole of September, has been toward the upside. If you're looking for a follow-through of that momentum, again, you want to see some kind of Marubozu working its way up through that resistance, and that open up through the resistance is what will give you a trigger to be looking for an extension long. But as long as that resistance is holding, your default position has to be a short, and only a breach of that resistance will give you confidence in looking for another extension north on this particular instrument. So 8340, a very critical level here. As long as it holds, I'm looking to position myself south on this instrument. Only a break of that would invalidate the southerly bias, and it would trigger almost a stop and reverse type of play, looking for another extension north in the momentum on this particular instrument. What's also interesting about Kiwi right now, and I actually like the idea of Kiwi weakness more than any other pair that we've been looking at, right? So it doesn't really matter to me whether the last RBA statement was hawkish or not. I think you've just got to kind of look at the level and play the level itself. Do what the price is telling you, rather than to be reading RBA statements and saying, that's a bit dovish, or it's a bit hawkish, or anything like that, right? There's a resistance there. The resistance appears to be holding. We've been looking for Kiwi weakness for quite a while now, and if you don't pull it off against the dollar, there's no reason why you can't pull it off against a different Kiwi cross. All right, so there are two which we're looking at the moment. The first is AUD/NZD. So we've been buying this instrument since last week, and again, she's at a kind of a key level, right? So there's potential here where she's bottoming, and this may well turn into some kind of a double bottom structure, not necessary, although it's not strictly necessary, but it could. What we're looking for at the moment on the AUD-NZD is that we have a resistance which has been established here at the 14 handle. And what we would like to see from a price action perspective is a very clear break through that area. And this has been resistance to resistance block. You can see that quite clearly. So on a pullback, what we would like to see is for this to turn support. And if we can get this area flipping SR, then to the upside, I think it really does open it up. And you could be looking very, very easily at the 119 handle, right? So we're kind of long on AUD-NZD. We're long from around the lower 12 handle, and our thesis is that as long as that 12 holds, as long as that low holds, then to have a bullish bias on the AUD-NZD, it's not something which is unreasonable to be doing. If we can take out 14, it'll open up the doors towards the 19 handle. All right, so it's about the Kiwi dollar. It's about looking for weakness in the Kiwi dollar, and if we don't get it against the US dollar, you never know. We might pick it up on AUD-NZD. All right, so it's one particular peg. Another Kiwi cross, which is quite interesting right now, which is quite exciting right now, is the Euro-NZD. Again, it's a technical play, right? So we've seen pretty much over the course of this month, I've said this month, we've seen over the course of this year, at the beginning of this year, particularly in that second and third quarter, bullish momentum develop on this pair. And we're seeing that a support has been established. That support is, if we're looking at it from a kind of hooking structure point of view, you just have to trace this part here. All right, so we saw the price break, hook, establish support, break higher. And so what you want to do is just box off that area. All right, now, from a technical perspective, this zone is support for the instrument. All right, and what time frame am I on here? I'm on a H4 time frame here, but we've got support here. That support is between the 63 and the 61 handle. As long as the price remains above this block, technically, Euro-NZD remains a buy. Okay, very critical piece of information here. Technically, she remains a buy. It doesn't matter what the price is. You know, if the price is 64, or if the price is 66, if the price is 71 or 72 or higher, it doesn't matter. That's where the support has been established. So as long as she remains above this block, she remains a technical long. Only a breakdown below that block would invalidate that bias. What it means is that the closer to that 61 handle you're buying, right, the smaller your risk definition is going to be. You're very close to a level that would invalidate the bias, right? It makes a very, very good area to be buying. So we're looking at buying any kind of dips in this block, and it does look as though on an intermediate level, after hitting the low of that support, she's kind of broken up, and she's making an intermediate support here. That's coming in around the 62.20 area. We're seeing some element of support being established. All right, so very much, again, you know, this is about Kiwi weakness. It's not about Euro strength, right? And all the technicals across the Kiwi instruments, they all seem to be lining up. They all seem to be lining up at key levels. You know, we're seeing an SR flip develop on NZD USD. We're seeing Euro NZD hit a key support area. We're seeing AUD NZD potentially forming a double bottom. It is very, very early to say yet on AUD NZD, but we've been prepared to pay it, and it's paid dividends, paid pips. All right, so Euro NZD, I like it. All right, and to the upside, if this block is holding, you could very easily see a move back into the 70s. So it's worth taking a look at. It's worth taking a look at, particularly if you can get risk definition, if you can get it close enough to that area, for risking a very small amount of pips, you could be looking to capturing a whole big amount of pips, right? So it makes it one of those pairs which is very much worthwhile monitoring. Makes it very much worthwhile monitoring. Okay, just a couple more to work through. First off, pound Swissy. All right, so another technical play on the pound Swissy. All right, so again, we have a flip zone on the pound Swissy. All right, there it is there. So was support, was resistance. Last week when we were looking at this, we said, you know what, it's default short as long as the price remains below that block. The price has fallen away somewhat. What we're looking at now is resistance which has been established at 45.70, and we're saying from a technical perspective, as long as the price remains below 45.70, look for another extension to the downside. A move above 45.70 invalidates. All right, so there's an SR flip there on the pound Swissy. Nice, easy technical to be playing as this week is kicking off. Last one up is the pound Canadian. All right, so we were shorting the pound Canadian last week. We got a very, very sweet entry around the 67.70 handle there. The price dropped off about 70 odd pips. It's a technical play, but it's a technical play that potentially gives us a downside target, looking for an extension towards the 64.00, and if it's going through the 64.00, potentially towards the 63 handle. The move that we had last week looks as though it looks like a momentum move. All right, momentum moves usually follow through. So what I'm kind of believing about this instrument is that, and it's just a case of looking for a level, right? It's just a case of looking for a level. So let me just mark it up and you'll see what I'm looking at. All right. We have our block here, 66.60. I think that if the price extends as far as 66.60, it'll be too much, right? So we're looking for resistance somewhere around here, somewhere around the 66.20 handle, basically for the 66 to hold it. So you might see from a price action perspective, she makes her way up to through the 66 handle, and then you get an hourly or a 4-hour collapse back below the 66. It becomes a trigger to be shorting this instrument, looking for another follow through to the downside this week. All right. It's still a counter trend rally in the overall scheme of things for the time being. All right. But I think that the momentum that we saw develop towards the downside last week, there is potential for that follow through. That's what I'm looking for on the pound Canadian. It's going to be about the 66 handle. It's going to be about 66 holding it. I suspect the price will make her way a little bit through it, but getting that hourly or getting a 4-hour close back below the 66 handle after it's been breached, I think that will make a fairly good trigger to be looking south on this instrument, to be getting involved. We're already south on it, so we're going to be looking at adding. But I think that is going to be your key level. That's the one to watch, and that's the one to play. If I'm trading anything this week, more than likely it's going to be this pound Canadian and maybe something on the AUD USD, which particularly I like. I like the cleanliness of the setup of that pair, which we looked at earlier on. Okay, folks, that's your lot for this morning. I think we've worked through quite a lot, maybe 8 or 9 different charts there. We do have a little bit of time, so if there are any questions, I'm quite happy to take those. Otherwise, we'll wrap up. Cheers, John. Always welcome, sir. What do you think about Euro USD? Red line. Okay. As Euro USD, we have support which has been established at 34.70. Right? So, as long as the price is remaining above the 34.70, the default position would be a long on this particular instrument. Okay, so if you're looking at it from a price action point of view, it's very clear. Look at the direction of the momentum. All right, you're seeing support being established. Default long above that support. It doesn't mean long at this current price, but what it means is that the long momentum would only become invalidated once the price is broken down below 34.70. As long as it remains above 34.70, the momentum remains intact, even if the price is pulling back toward that level. Okay, so that's one thing to note on the Euro USD. The other areas to be watching are obviously your kind of tape reading levels. All right, so we have our weekly open that's coming in at 35.50. We have our monthly open that's coming in at 35.20. From a technical perspective, you want to be keeping an eye on that monthly price the most. As long as the month is facing, as long as the monthly bar is a bullish color, you want to be careful about shorting. If you are shorting, you want to watch your risk definition and make sure you keep it very, very tight. Once the monthly color turns bearish, then you can short quite happily, right? And vice versa on that kind of bullish dimension. If you've got a bearish monthly bar, you're very careful when you're buying. If that monthly bar has turned a bullish color, then you can be a bit more aggressive with your buying at that stage, right? So we have two analyses here. First is just from the point of view of where is the support being established. Support is coming in at the 34.70 handle. Then from a tape reading perspective, you want to be watching your monthly direction, and in particular, you want to be watching your weekly direction. Your monthly direction comes in 35.20. Your weekly direction comes in 35.50. Those represent your flip areas. Okie dokie. Michael, GBP, AUD. All right, so this is the chart for GBP AUD. Again, first off, just look at the direction of the momentum over the year. We're on a daily time frame here. All right, you're just going to have to excuse that for the time being. But we've seen a very, very nice momentum develop on the GBP AUD since the beginning of this year. If we're looking at this momentum, remember when the price is moving upwards, the right question to be asking is where is support? Not where is resistance, right? So, if we're asking where is support, we saw support being established at the 63 handle. Then we saw resistance being established at the 68 handle. The resistance was breached, and we saw that resistance turn support. From a technical perspective, as long as the price remains above that block, she remains bullish. Okay, what that means is that anywhere near the 68 handle, I would be looking to be buying as opposed to be selling into that block. All right. If it happens that she breaks down, then that does open the doors towards the 63, but you would want to see the price break down first. You'd let it break down, you'd let it pull back, you'd let a resistance be established, and then you can become a keener seller than you are a keen buyer. At this particular stage, there is nothing in the price action on the wider time frame to indicate that the bullish momentum is over on this pair just yet. You want to see a break below 68 in order to start getting that inclination. As long as she remains above the 68 handle, technically she remains bullish. Let's take a look at this on a lower time frame. So this is the H4. It's not that much different on a H4, or even in fact on a H1 you're not seeing so much, but it's not that much different on a H4 than it is on the daily. All right, we've got hard support which is coming in at the 62 handle, and we have support resistance which is coming in at 68. As long as 68 is holding, technically she's bullish. If you want to get involved in a bullish trade off of that level, it's up to you what you use in order to decide that. You might wait for an hourly bullish bar or 4 hourly bullish bar. You might say, you know what, I'm going to wait for a bullish day before I get involved. But it is going to be about that particular level on GBP AUD. USD CHF, there is a S&B event later on this week. I'll just choose to ignore them, but I don't know if it's a speaking engagement or something on Thursday. You always have to watch out for those guys. They are a sneaky bunch. As far as USD CHF is concerned, I'm just tape reading on this particular instrument. All right. What do I mean by that? I may as well explain it. Let's have a look. The level that matters is right here. Okay, that is around about the 91.30 area. Why that is the level that matters is that is the yearly opening price. Okay, that's your yearly open on USD CHF. The instrument pretty much spent the whole of the year above that price. So here we are on the H4 time frame, going back to January. Okay, and you can see she spent pretty much the whole of the year above that price. Anytime she pulled back, she was supported at that yearly open price. What we saw happen last month was the price fell down below that yearly open price. And not only that, but she appears to have pulled back and found resistance at that price. So what I'm saying is that as long as the price remains below that 91.40, 91.30 area, 91.30, all right, as long as she remains below 91.30, technically you ought to be bearish on this particular instrument. You might see on occasion some sharp rallies back up towards that area. I'm always suspicious of that happening, but there's an SR flip here. And like I said, technically, as long as she remains below that, I'm selling. If I'm doing anything, I'm selling. I'm not looking to buy the dollar Swiss. All right. If she goes above 91.40, I'll change my mind, and I'm quite happy to do that. But I think that this move, this shift in the yearly direction is significant. All right, and that's always going to be significant. You don't want to be fighting it, I guess. All right, you don't want to be fighting it, and so in that spirit, if you're doing anything with the dollar Swiss, sell it. And don't be looking at buying it just yet. It is about tape reading on this instrument. It's the yearly open. That yearly open, 91.30. As long as the price stays below that, it's a short. It's not a long as far as I'm concerned. In fact, we were selling from the 94 handle, looking for that yearly open to be breached and for the yearly direction to change. There's a few months left to the end of the year, and all right, let me just show you something, right? It requires a little bit of imagination because most trading platforms, in fact, I don't know any trading platform that shows the yearly time frame. But if you were looking at the yearly candle for dollar Swiss right now, what does it look like? Okay, and I'll put it to you that it looks something like this right now. So there's the high that we hit this year, right? Up at 98. Okay. That is what the yearly candle on the dollar Swiss looks like right now. And there's 3 months to the end of the year. So what you have to do is kind of put your imagination cap on and start imagining what is this candle going to look like at the end of the year. All right. So, it's kind of unusual to have candles like that. It's unusual to have a candle that shape. Wouldn't it be interesting if it kind of finished, something like this with a much bigger body to the downside? That's what I'm imagining right now. So it's about that yearly open price. Okay. Very easy, straightforward analysis on that. Like it. All right. Let's have a look. Something in the Q&A. CHFJPY looks interesting. Any thoughts on CHFJPY? Okay, it's not a pair that I usually trade, right? So we'll take a look anyway. Let's have a look where it's at. CHFJPY. Okay, it's not looking much different to. It's not looking very much different to how the AUD JPY was looking. What I would do on this pair, we'll look at the tape reading in a second, all right? But I think the thing to do is kind of mark your trend. You're looking at something like this, aren't you? I guess that's what you're looking at, and you think that there's some kind of flag which is forming here. If that's a flag, wait for it to break. Okay, wait for it to break. And sometimes you do see channels like that breaking upwards. Other times you might see it breaking downwards. When I mark channels like that, what I also do is to look at it in the context of the most recent momentum. And once I've looked at it in the context of the most recent momentum, I design a trigger to confirm a break in the direction that I'm looking at. I hope that kind of makes sense, right? I'll just explain it. English is my second language. All right, let's have a look. So we're seeing momentum to the downside, right? And we're saying, should we be buying this instrument right now? So what we say is, okay, let's have a trigger. Rather than to bite aggressively, believing that the price is going to go up, let's have a trigger which tells us that the price is going to go up. So what we do is we mark resistance, and we say, all right, we can see a cluster here. So let's mark that cluster. All right, we can see an SR flip in that area. What would become a trigger for a long trade? I want to see the price up through that resistance pullback. There's been resistance in this block. So I'd want to see support being made in that block after the price broke north. And then I would chase it. Yeah, Brahmi is my first language, mate. You know it. All right, so I'd want to see a change first, right? So it's not just about the channel. The price appears to be pulling back now. It appears to be falling. And even though you have that flag construct, you want something to act as a confirmation if you're going to chase it long. Otherwise, I've seen as many of those flags break down as I have break up, right? So a little bit of a kind of cautionary note there. It's not an instrument that I trade often, right? So, but if I was reading it, that's how I would choose. That's how I would choose to read it. Another word of note. So this is from a tape reading perspective now. You have a resistance which has been established here. That's coming in at the 108.70 handle, 108.50 handle. around there. That price level also coincides with your monthly opening price on this instrument. All right. So as long as the price is below that level, the month is bearish. And again, I hate buying a bearish monthly candle unless I have a very, very good technical reason for doing so. If it happens that the price breaks north and breaks up through that resistance, and on a pullback, you'd be looking for that same level to become support, and you can do it much more aggressively. I guess the underlying principle is that, if you think that there's going to be another bullish wave on this instrument, there is nothing wrong with letting a little bit of that happen first before you get involved. And I don't mind sometimes missing a 300-400 pip rally. If you've been following a long time, you realize that. Sometimes I have this analysis and you see the instrument rally 200-300 pips and I'm like, right, let's buy on a pullback. Right? But there's nothing wrong with that. Right? You might miss the first 100 pips, but you'll catch the next 100. But at least the wind was in your sails when you got involved. It's much better than getting involved in a trade and fight aggressively and finding out you were wrong. All right. So once the wind is in your sails a little bit, you have a much better chance that the price is going to follow through rather than trying to anticipate that and getting it wrong. So I think it's going to be more a case of designing triggers on this instrument. From a tape reading perspective, it's about 108.70. That's where the monthly open price is. Once the price is above there, I'd be a happy buyer. Right now, if I was doing anything, I'd be looking at selling the instrument rather than buying it. Okay? Just a question of risk definition and where you do that from, more than anything else. Okay? Okay, John. At one point, though, it broke up from a long-term resistance. Okay. A wider time frame here. I guess what you're looking at is this. That's what you're looking at, isn't it? You're saying, okay, resistance, and what I'm expecting is that we're going to get some kind of support here and then a move to the upside. Okay. Look, that's not an unreasonable analysis. All right. The main kind of caveat which I'm attaching is to say, all right, that is how you would expect for price to move. But what is going to be your trigger? All right. So you want to get involved in a long trade. We've seen the price pull back to this area and we've seen it bounce and we saw it bounce again and now it's pulled back again. How many times is it going to soak up orders from this area? All right, something to think about. So what you have to do, and this is the kind of caveat, is say, you know what, I'm expecting for resistance to turn support here, not unreasonable, right? But what's going to be my trigger? What's going to be the confirmation that this area is actually holding, right? So if you are aggressive, you could kind of play that at market and say, look, I'm prepared to risk 50 pips, 80 pips in order to find out. And if this area holds to the upside, I'm looking at a move beyond 109, possibly 110, 113, right? Or you could design a trigger that would allow you to get involved, which would act as a confirmation that you are going to get a rally from here. For me, I'd want to see some kind of SR flip, or I'd want to see the price break above the monthly open. Right? And then I would be a lot keener on it. We've already seen price bounce from here on two occasions. Maybe it bounces a third. Maybe those two occasions soaked up all the buy orders there. And that means you're not going to develop momentum anymore. A little bit like how we looked at the USD JPY, right? We had our wall. She bounced off it the first time. We grabbed 150 pips. She bounced off it a second time. We grabbed another 150. The third time she bounced 70 pips, we captured 50 of those. Right? Okay? The fourth time, she bounced 50 odd pips. Right? 55 odd pips. She's back at that wall and she's just sitting there. Alright? So, this time around on USD-JPY, we designed a trigger. We said, alright, let it run. Let it work its way through a resistance. Let it make support, then we'll take a look. We just need a confirmation. We just need to be sure. So it's not a wrong level to be looking at. I think what's going to matter here is your confirmation and how you design that, or what it is that would trigger a confirmed long position on the instrument right now. I wouldn't necessarily be buying at market. Patience isn't anybody's strongest point, fella. Right? It's just a case of having a trigger. It's always about black and white. I hate grey. It's nice that you're looking at the right kind of area, but you just have to design a trigger and say, that is my trigger. If I get my trigger, I play. If I don't get my trigger, I'll leave it alone. Right? We're here to make money. We're here to make money. And let that help you develop patience. All right. Michael John, GBP NZD. All right, let's take a look. I rather suspect that GBP NZD is going to be very similar to Euro NZD. All right, so again, if we're looking at it from a momentum perspective, here's our break, here's our hook, and so you just box off that zone. We have support which is established in this block. Okay, so you can get a deep pullback into that block that pushes down towards the 189 handle, but from a technical perspective, as long as 189 is intact, the bullish momentum on GBP NZD is considered intact. If it happens that the price breaks down below that block on a pullback, you're going to be looking for resistance and then an extension to the downside. All right, so GBP NZD, it's all about the 189 handle. As long as 189 is holding, then technically the bullish momentum is considered intact. The way that we're breaking down this chart is not that much different to how we were looking at the Euro NZD. The current price is 93.60, 450 pips in order to define risk. I wouldn't be taking an entry just yet. All right. If I'm looking for a swing, I'd be looking for the price to be much closer to the 90 in order to try and capture some kind of swing off of it. There may be some kind of, I don't know, I guess a lot of guys are going to be looking at that and wondering, is that a double, triple top? Maybe it is, maybe it isn't. But you know what? In the near term, if I'm buying, that would be the block that I would do the buying in. Okay, that would be the block that I would do the buying in. If you're looking at the sell side equation, then you have resistance which has been established at 96, and you might say from a technical perspective, as long as the price remains below 96, it's fair to be bearish on the instrument. But both of these arguments, they have one problem: risk definition. Right? It's too far. It's too far. So I'm not looking at playing this particular instrument just yet. Okay. All right, folks. I think that's your lot. Cheers, everyone, for attending and taking the time to do that. I will be back here in 2 weeks' time. So that is going to be the 21st of October. You can pre-register on the FX Street website. Thanks to FX Street, of course, for providing this platform. Don't forget to check out my website. It's www.wmdforex.com. If you like what you've heard and you like the analysis, you're welcome to join my live trade room. If you want to trade alongside me, or subscribe to my trade note. If you check out the website, all the services provided are on there. So I will see you all the next time. Cheers, fellas. Bye.